Stock recommendation number 1, Wuxi Biologics. Market cap, $66.763 billion. Wuxi Biologics is a CDMO headquartered in China that provides open access, integrated technology platforms for biologic drug development. This company does not really operate in one application area but is in some ways an all-rounder. It develops software that is used for research and cooperates with many companies to market this software but also to produce drugs for countless areas of application. In the process, the company has 7 subsidiaries in China, 3 in the USA, 2 in Germany, and 1 in Ireland. Now let's have a look at some numbers. Wuxi Biologics had revenues of $1,607 billion in the first half of 2019. In the first half of 2020, that increased by 21% to $1,944 billion. Profit was $671 million in the first half of 2019 and $787.3 million in the first half of 2020. Wuxi Biologics has made a revenue increase of 64.4% and a profit increase of 68.2% since 2014. Judging by its broad-based operations, big-name collaborations with companies worldwide, and good numbers, Wuxi Biologics is a profitable company, which is very rare to find in the biotech segment. Accordingly, it is also by far the most highly valued. However, because it is such a large company that has its own software for developing new solutions in medicine, sells this software, and is also involved in the production of drugs, it is difficult for me not to see growth potential here. You have a company that covers all desirable sectors itself and is very unique. Stock recommendation number 2, Denali Therapeutics. Market cap, $9.229 billion. The company focuses on discovering and developing therapies for patients with neurodegenerative diseases such as Alzheimer's, Parkinson's, ALS, and others. Denali's approach is to use genetics, pathology, and cell biology to find a way to solve these diseases. In the process, the company has found 22 drugs, 4 of which are currently in clinical trials. Now let's have a look at some numbers. DNLi had revenue of $8.41 million in the first half of 2019, rising slightly to $9.45 million in the first half of 2020. The loss per share remains steadily at a similar level. It will remain so for the time being until the first clinical trials are complete and approved. 51 cents EPS is not unusual in the biotech sector precisely because of the horrendous research costs. DNLi has had incredible success in discovering therapeutic approaches and drugs. Even if the approval rate is only a quarter, there will be enormous potential over the years if the research success remains the same. And all this in fields where there are currently only partially successful therapeutic approaches. Stock recommendation number 3, Exelixis. Market cap, $7.387 billion. Exelixis is a company that produces genomics-based drugs against cancer. They already have an approved anti-cancer drug, Cometriq. The company is currently involved in 50 clinical trials and currently has 4 other anti-cancer therapies in the pipeline. The company has years of experience in the field and is listed in the S&P 400. If research in genetic engineering increases in the coming years, here is a company that is well positioned in this field. Now let's have a look at some numbers. In the first half of 2019, revenue was $455.77 million. In the first half of 2020, it was $486.38 million. So the company is showing a little growth. What is noteworthy here is that Exelixis is in the black because of the drugs they have already approved. They were able to turn losses into profits in 2016 and have been cash flow positive ever since. Exelixis reinvests a lot of its money back into research and still remains profitable despite large reinvestments. This company is probably the most conservative out of the list with the least risk of loss. An already profitable company that is listed in the S&P 400, but still has huge growth potential as it has a big head start with genomics expertise. Stock recommendation number 4, MorphoSys. Market cap, €3.759 billion. MorphoSys develops biopharmaceutical drugs. The company focuses on cancer and inflammatory diseases. However, the company focuses not only on the discovery of the drugs themselves but also on the technologies and the intelligent development strategies themselves. MorphoSys already has 2 approved products on the market and 3 proprietary antibodies. The company is broadly positioned with its technology platforms in the market and also licenses them out to academic institutions and biopharmaceutical companies for research. Similar to the first candidate on this list, MorphoSys is a multi-talent that is both a software and a research company. In addition, MorphoSys already has approved compounds that provide the company with a financial cushion. Now let's have a look at some numbers. MorphoSys reported revenues of €48.2 million in the first half of 2019. However, this multiplied to €269.7 million in the first half of 2020. Losses turned from -€28.5 million in the first half of 2019 to profits of €179.8 million in the first half of 2020. If this trend continues, MorphoSys is currently an undervalued company. The approaches the company is taking are similar to those of wuxi Biologics. MorphoSys has its own software, which it combines with research and development and simultaneously subcontracts to others. In doing so, the company is one of the very few others that deals with autoimmune diseases in addition to cancer. From the list of companies I've chosen, this is definitely my favorite. Stock recommendation number 5, Bionano Genomics. Market cap, $3.167 billion. Bionano Genomics has already attracted attention with big upside in recent weeks. However, I believe the stock could continue to have greater potential. Bionano Genomics already marketed its own whole genome analysis device, CIFER-R. This allows for the diagnosis of genetic errors with an error rate of less than 2%. Clinics that want to carry out these analyses can buy the device, but they can also have the samples analyzed directly by Bionano Genomics or pay in a subscription per analysis to have genomes analyzed. In addition, Bionano Genomics itself still conducts research in the fields of cancer, genetic diseases, and genomics. Now let's have a look at some numbers. Bionano Genomics had revenues of $5.86 million in the first half of 2019. In the first half of 2020, revenues dropped to $3.93 million. However, the company managed to lower its EPS from -77 to -30 during this period. Most recently, on the 12th of November 2020, EPS was only -8 Bionano Genomics is well positioned with CIFER and could develop further potential in its own research. It is only a matter of time before the company becomes profitable. Bionano Genomics remains interesting to me despite a current overvaluation, as the analytical tool built by the company could be a springboard for the research of the same. The research could virtually fund itself through the commercialization of CIFER in the 3 models mentioned above. Stock recommendation number 6, nantkwest. Market cap, $2.914 billion. nantkwest is a company that focuses on the treatment of cancer and a few other diseases. Of note here is that nantkwest is taking a unique approach that I haven't seen in any of the other 140 biotech companies. nantkwest has built its own cell-based platform through which they can introduce genetic material into cancer cells or cells affected by infections. The company itself calls it, natural killer cells, the quest towards a cure. An approach that is so impressive and, according to the clinical studies, also works well. So we are talking about vaccinations. Of the 13 therapeutic approaches the company has in the pipeline, 5 are in the clinical trial phases. Now let's have a look at some numbers. nantkwest, as mentioned several times now, has negative EPS common in biotech. However, since 2016, EPS has improved from -$1.47 to -70 in 2019. Revenue increased from $12,000 in the first half of 2019 to $30,000 in the first half of 2020. These are by far the smallest numbers, and this is certainly where hope for the company's approach lies behind the large market cap. A vaccine against cancer would be incredible. nantkwest's cells are already being tested and the potential seems to be there. The company could have a promising future but remains, at least of the companies on the list with a market cap of over $1 billion, the riskiest investment among the aforementioned stocks.